Why have you decided that now is the time to return to share buybacks? What makes this quarter the right time to do that?
Well, Anna, good morning, and thanks for having me on. Look, I think a couple of things. First of all, it's been a strong quarter for the company financially. As you said, strong earnings, but importantly, strong cash flow. We took in $11 billion of cash in the first quarter, about $6 billion from operations and $5 billion from divestments. And what that has allowed us to do, Anna, is meet our net debt target about a year earlier than we had planned. Bloomberg, I think, has long been anxious about our debt levels, so I'm glad to confirm that we've met that target a year early. We're at $33.3 billion. Importantly, Anna, down $18 billion from the peak in the pandemic. We peaked at $51 billion. And now that has enabled us to move to the next phase of our financial framework, which is to begin buybacks. So we'll begin buybacks in the second quarter, $500 million. And then at the same time, we've been making strong strategic progress as we transition the company. So really, it's a story of delivering on our promise of competitive cash returns for our shareholders, while at the same time transitioning the company for the future.
Yeah, I do seem to have asked you about net debt on many occasions, Bernard, so it's interesting to move the conversation on then, isn't it? Let me ask you about these buybacks a little bit more. Are you having to do the buybacks to keep the investment proposition attractive to shareholders? Have shareholders been demanding that you return more cash through this transition?
Well, the first thing to say, Anna, is that the plan around buybacks is a plan that we actually announced on the 4th of August last year when we announced our new financial framework. So in many ways, there's nothing new. What has happened since then is that we've made those deliberate steps along the way that enable us to move to this phase of the financial framework. And that's been a strong focus on the balance sheet, a strong focus on cost. We've restructured the company, taking out $3 billion of cost, almost 10,000 employees, and at the same time, bringing on major projects, capital discipline. All these things that the team's been working very hard on have sort of come to fruition in what is a stronger environment as much of the world begins the slow journey out of the pandemic. So it is really a story of doing what we set out to do on the 4th of August. We've reached that point, and the opportunity now exists for investors to get back over the coming years to those pre-pandemic levels of distributions per share in a moderate to strong environment. So that's the offer: strong competitive cash returns while at the same time transitioning BP.
And can I ask you, Bernard, about the trading results that you've delivered? You've described them today as exceptionally strong in gas marketing and in trading in the first quarter. I wonder how much better than usual the numbers in those various parts of the business are. I'm thinking about how sustainable this is.
No, it's a great question. And of course, the word exceptional means just that. It was a very exceptional quarter in gas trading. We were well positioned for colder than normal weather in the US and in Asia. Our traders were well positioned in the market, and we were able to profit from that. So it was an exceptional quarter in gas trading, also a good quarter, I should say, in oil trading. But importantly, the sort of fundamentals of the business, Anna, are strong. The operations are running well. Castrol actually had a very strong quarter as well. So it's really that hard work that we've been doing, focused on the bottom line, really on cost and capital, is beginning to come to fruition. And in terms of looking forward, if we look at the second half of the year, we think this is a business that can break even in the second half of the year at around $45 oil, and anything north of that, and of course you see prices today in the 60s, anything north of $45 oil gets us into surplus cash. And what we'll do with that surplus cash is allocate 60% of it to our investors through buybacks, and continue to take care of the balance sheet by putting 40% of that surplus cash onto the balance sheet.
Let me ask you about the demand side then, Bernard. We cover the humanitarian crisis that's happening in India right now. It's clear that the pandemic is not behind us in many parts of the world. 1 million new cases in 3 days. You have operations in India. You obviously sell into India, and global oil demand relies to some degree on the Indian demand story. What are you seeing in terms of the demand picture in India right now?
Well, Anna, you're quite right. It is a humanitarian story. We have 7,000 employees in India, and we lost 2 employees, sadly, in just the past week. And our first job, as you might imagine, is to do everything we can to take care of those people. And we're also doing what we can to help India. We're working with our partner, Reliance, to see if we can help get oxygen to hospitals in India. So that's very much the sort of focus of the job on day one. From a business perspective, and it is a very secondary perspective, we're seeing very little impact at the moment. The question, of course, is what will happen in the coming weeks and months. Will there be lockdowns and so on and so forth? But I think if you look at the picture overall in the world, I think you're seeing incredibly strong demand in America and in China. China's oil demand is now above pre-pandemic levels. America is almost back to where it was. I think the vaccines are going to kick in now in Europe. That will see strength in Europe. And then, of course, the question is what happens in the rest of the world. On the supply side, I think OPEC has demonstrated both the capacity and the willingness to stabilize the market in what looks like a $60 to $70 world. And we believe that they have the tools available to them to enable them to do that. So uncertainty as ever out there, but with that stabilizing mechanism of OPEC in the background, I think the outlook for oil is reasonable over the coming months and quarters.
And Bernard, we've talked about the transition that the business is undergoing. Restructuring has been part of the conversation then over the last year or so. Your restructuring is supposed to see 10,000 jobs lost. I wonder how far you are through that restructuring process.
About 5,500 people have left the company. Many of them, of course, through a voluntary process. But obviously, we've had to ask, sadly, some people to leave the company as well. We'll see another 2,000 to 3,000 people leave during the rest of this year, and then the remainder early next year. It's been a very difficult process for everyone involved, not least the managers who've had to make these decisions and tell these people, but of course the people who are impacted, who have in many cases have had 30, 40 years with the company and have done incredible things, and they're all great people and we wish them well for the future. I think the good thing, Anna, if I can look forward, is that we had the option, and I think we've discussed this in the past, we had the option last year to pause restructuring, pause our new strategy, and just hunker down. And we actually took the decision to keep going, to press on, so to speak, through the past 12 months. And the good news today is that we are where we are today. We can now look forward. The organization has been restructured. The new structure is up and running. We're now bedded in, and we're beginning to see, I think, that show through in the results. So in many ways, that's behind us, and we can now focus on the job at hand.
OK, and just to circle back slightly to something I was talking about earlier, you talked about it being exceptional, so I want to ask you once again about it. Your exceptionally strong gas marketing and trading part of the business, part of the story, Bernard. I'm sure shareholders will want to know a bit more detail about what drove this result and therefore how you say it's exceptional, but whether any of it is going to be sustained. Can you give us any guidance around how much more than usual you made from trading activities in this quarter?
And I understand the question, and it's obviously a good one. And you know, we don't actually ever disclose our trading results, but you know, there can be a cycle in these things. We actually had, I would say, a poor quarter in the fourth quarter in trading, and this has been in gas in particular an exceptionally strong quarter. I think the thing to point to is this break even for the business in the second half of the year, which doesn't rely on exceptional gas trading profits, so to speak. And we believe that in the second half of this year, we can have surplus cash anywhere north of $45 oil and call that in a normal trading environment. So we don't rely on exceptional trading results to deliver buybacks going into the future. In a moderately priced world, there will be surplus cash. When there's surplus cash, 60% of it will go to buybacks, 40% of it will continue to go to the balance sheet to deleverage, and we kick that process off with $500 million of buybacks in the second quarter.